Hello everyone, Eric here with the Stock Market Companion video update. What we're going to cover today are three things. One, what to do when the market is suddenly gripped with a geopolitical event like Egypt. Two, how to look at market-leading stocks. And three, our tip of the week. Let's get started. What we have here is the Dow Jones reaching back from the early part of July all the way through now to the beginning of February in 2011. And what we have is a very clear mark here for Friday when the Dow dropped approximately 165 points on this news out of Egypt that there was unrest. What we did on that day when the Dow dropped that 165 points was, during that day, we sold all our holdings of stock. We had two holdings, we immediately sold our holdings, and went to cash. 100% cash. Why? Because we don't know how far the market's going to respond to this event. We don't know how far down the market could go. So instead of participating in the market, taking those risks, we immediately go to cash. What we see the market doing, however, is we see the market then on that Monday, instead of opening up much lower, perhaps 200 points lower or 1,000 points lower, we see the market catching hold of itself. And then on Tuesday, the market then going back up higher and pushing up farther, almost basically ignoring this event. It doesn't matter. What we know is this. We don't know what's going to happen next in the Middle East. If something were to happen with the Suez Canal, the market would respond immediately with tremendous selling. So we're on the sidelines with 100% cash. Now let's take a look at how we look at a market-leading stock. In this case, we're going to use NVIDIA as our example. NVIDIA makes the processor chips for smartphones. Smartphones are perhaps the strongest market right now in the retail marketplace. Let's take a look. What we have here is the stock chart for NVIDIA reaching back to the July of 2010 and then stretching all the way here to today, the 3rd of February. We have the stock at around $10 a share back here in July, dipping down strongly at the beginning of August when the market itself was threatening to go further south in August as uncertainties were arising about whether we were going to enter into a double-dip recession. And then pulling out with the rest of the market back here in September with a good push back up here around above $10. This was also the entry for the Stock Market Companion with the stock. And then we see this very strong advance now into the first part of this year. What we would like to do with a market-leading stock like NVIDIA is determine a place where we can enter in safely. Entering in safely means for us being able to buy the stock and then put a stop-loss order in a nearby support zone where the price has come down, found support, and gone back up in order for us to participate in a further up move in the stock. Let's take a look. From a broader perspective, on a weekly chart, we see that NVIDIA now at roughly $25 a share is back at its mid-08 highs. We have this whole area down here from let's say June of 2008 all the way now through to February 2011 as a significant dip in the stock. Now we're back up to these mid-2008 highs and we need to see what the stock is going to do next. Isn't it interesting how the stock has basically stopped right at that point where the highs were in 2008. We teach our subscribers at the Stock Market Companion that stocks have memory. And here we see how this stock has a very strong memory. It's come right up to this 2008 high and it's paused. What we would like to see is a little bit of a back and forth action up here at around 25, where we would then be able to put a stop in underneath perhaps these recent lows at approximately $22 a share in order for us to then participate in a further up move in the stock. We would like to give this stock a little bit more time here at around the 25 area before we got on board. This trouble in Egypt is giving us an opportunity to give this stock a little bit more time. So a little bit more time here in the 25 area, showing us that the stock indeed wants to hold on up in this mid-20s area and not retrace down and not sell off down into this range below this $22 a share point is what we're looking for before we get back on board. Now on to our tip of the week. Our tip of the week is how to respond when the market is suddenly hit with a geopolitical event like we had this last week with Egypt. At the Stock Market Companion, we teach to head for cash immediately, sell all stock holdings. Why? Because the broader market averages, whether it's the Dow or the NASDAQ or the S&P 500, act as multipliers for individual stocks. When the broader markets go up, individual stocks go up anywhere from 2 to 4 times that same percentage amount as the broader markets. So if the market goes up 10%, a good growth stock within that market will go up anywhere from 20 to 40% during that same period. And the same is true when the market goes down. When the market goes down, the market acts as a multiplier for individual stocks to the downside. So if this situation in Egypt erupts into something much more grave than what we have, we could have individual stocks going down 20 to 40% their current value. So we sell on the first day that we can. That wraps up our video update. We hope that you've learned something that will help you for years to come with your stock investing. For more information, you can visit our website, stockmarketcompanion.com, and there also you can try our free trial. See you next time.